Here, Con, and I thought, as a way of introduction, Con's a liquidator with Worrells, a very great firm to work with, and they're very practical. I've known Worrells for about 15 years, so and Con I've known for a couple of years, and he's always available to help us work through some interesting scenarios with our clients and give us the right outcome for what we need. So I said to Con, would he mind coming on today and just giving us a bit of an update of what he's seeing generally out there, and also maybe Con, just options that theoretically people could think about if they really can't see an end at the end of this, because I've had a few comments from clients saying, is it worthwhile continuing beyond, even though JobKeeper's there, is it really worth it all? So.
Okay, I'm happy to give you some feedback there, I guess. As Jeff mentioned, we predominantly just do insolvency work. Worrells is a firm that has offices throughout the country, I guess, but in Victoria we have offices basically in the city, the main office. We have offices in Ballarat, Bendigo, Geelong, Essendon, about to open up one in Werribee, Narre Warren, Ringwood and Frankston. So we're trying to cover all bases, I guess, so to speak. We're purely an insolvency-based firm, and what we do, we tend to offer assistance to, I guess, accountants, clients, I guess, in relation to options that are available in the event of financial hardships for both companies and personal situations. At the moment, I guess we are in somewhat uncharted waters, I guess, with what's going on out there. And I'm sure your businesses, or a lot of businesses, are actually struggling out there. The feedback we're getting is that the impact of the coronavirus is going to cause some significant issues for businesses, even for our business for that matter. Partly in the sense that the government's various efforts to try and stem or support businesses, I guess, during this period has basically resulted in really nothing pushing anyone into an insolvent situation within some reason, I guess. Basically, the ATO, the regulators have all pulled back in relation to any action they're taking for recoveries. They've changed the laws around the time required for stat demands, the quantum of debts in order to pursue claims. And having said that, though, I mean, it is difficult times. If shops are closed, there's no income coming in the door. There's still financial issues and hardships that are going to be experienced by a lot of businesses out there. From my perspective, I guess I'm getting a lot of calls at the moment from restaurants and retail. They've always been struggling. They've been struggling before the virus sort of hit. But I think with what's transpired, the inability to open up their shop and transact is going to cause grief now. And despite the benefits that the government are handing out, and I guess that's something that Jeff will outline a bit later on, I guess, it's going to be very difficult for any business to sort of turn around after this. It really does depend also on the time this is going to take to resolve itself. And having said that, what I'm hearing is even if it does resolve itself in 2, 3, 4, 5 months, there's still going to be quite a large time lag for any businesses to be able to sort of turn around and get back to what they were doing prior to the virus hitting. From our perspective, what we do and what we can offer, I guess, is an ability to look at your situation and give you options and alternatives. And there are always options and alternatives. It's one of the reasons why predominantly people set up companies, I guess, is for asset protection and protecting their home and other personal assets, I guess. So, yeah, a lot of people think that because they're operating a business and they should mortgage their home and the like and tip money into the business if there are financial constraints and issues. Now that is one of the options, but there are alternatives. And some of those, having said that, even though that is an option, there's also the option of obtaining security over any funds you tip into your business. So, albeit getting finance, mortgaging your home is an option, there are ways of trying to secure that loan, just like a bank would if you're approaching a bank. I mean, you all know that banks at the moment are pretty reluctant to lend money and without any bricks and mortar security being put up. So why risk your home and not take security over your business and your ability to generate an income moving forward? But some of the alternatives, I guess, we can run through are Yeah, look, administrations, intercompany arrangements is an option for a number of businesses. Now, administrations basically are a formal deal with your creditors. You're in a situation whereby there is some cash flow issues, some financial hardship, but you want to try and keep that business going, keep it in the same corporate entity, and try and provide a return that's better for creditors as opposed to a liquidation. So that's one of the avenues available. It's administration deed of company arrangement. Basically what that involves is you appoint an administrator, someone like myself, a registered liquidator, who virtually takes over control of the company's affairs for a period of about 35 days as a minimum. Our role predominantly is to, I guess, assess the viability of the business, and secondly, report to creditors in relation to any deal you want to put up. Now, any deal can be from profits from future trading, can be from funds from a different source that have been tipped in order to provide a deal. Now, the deal's meant to provide a better return to creditors than what a liquidation scenario would be. Now, and it's up to a liquidator to make that recommendation. Ultimately, though, your creditors vote on a deal on the deal at a meeting in 35 days' time. So the future of your business is basically in the creditors' hands. They've got to make a decision. They vote on three things. They vote on accepting the deal, winding the company up, or ending the administration. They're the three things they can consider. So it is a pretty big call to appoint an administrator and then put the future of the company in the hands of really creditors to some degree. But that is one of the options, and in a lot of scenarios, depending on the nature of the business, that may be the better option and better option available. One of the benefits of administrations and deed of company arrangements is that it avoids liquidation and avoids the various offences and claims that a liquidator may have against directors. One of those being insolvent trading. If you do an administration deed of company arrangement, it avoids the potential for claim for insolvent trading, and sometimes that's why directors are more willing to tip in something now to get that certainty and that release from insolvent trading later on. Yeah, the alternative is really liquidation, and liquidations can take. There's two forms of liquidation really. One is a court-initiated liquidation. That's where one of your creditors have taken action through the court system. Now, the laws have just changed recently in light of the virus, and the amounts that now creditors are entitled to pursue a company have increased, or to pursue bankruptcy have increased. I think that they need a claim now of about $20,000 before they can pursue a company through the court system. In the past, it was $5,000. So there's a big increase in the debt that's required for a creditor to be able to pursue a company. Secondly, in the past, a stat demand would have to be issued, and there's a 21-day expiry period for that. Well, the government's also increased that to 6 months. So if you receive a stat demand, you've actually got 6 months to address that stat demand, as opposed to the old style 21-day time frame. So the government's really worked hard to try and stem the flow of actions being taken to close or wind businesses up. So that's the court process, and it's a costly process for a creditor to take that action. The alternative is if you're in a situation whereby you don't see there's prospect of moving forward, it's not viable. You do have an obligation as directors, if you are directors of companies, to mitigate any losses and not trade whilst insolvent, because that does expose you if you do continue to trade whilst insolvent. And having said that, again, the laws have been relaxed for this period. For the next 6 months, the laws have been relaxed around insolvent trading. The regulators have spoken to us and asked us to be a little bit to be more mindful of the position and the fact that the virus is arguably a defence available to directors. That doesn't mean you can go out and just go and incur debt willy-nilly without any intent of paying. It's more for a business operating as normal as possible, trying to make ends meet. There is a defence available now for directors. Again, the government stepped in to try and alleviate. So there are avenues. There's also the ability to get the safe harbour advice. That's, in my view, not relevant given the stance of the government at the moment in relation to the virus. But in normal times, safe harbour is an option to try for directors to try and get some protection around insolvent trading if the company's eventually wound up. But as I said, the alternative is to wind up. Now, you can approach someone like myself, and we could arrange the liquidation of the company. It's a matter of completing some forms. It's in liquidation. It's not difficult. The role of a liquidator, though, is to assess and report to creditors and to ASIC in relation to the conduct of directors, and basically realise any assets that remain and distribute those assets in accordance with the Corporations Act. So our role is more of a reporting role. It's not necessarily a role where every claim is pursued under the sun. I'm sure in a lot of balance sheets you'll see loan accounts, you'll see asset loan accounts and various other claims or other assets that are available to a liquidator. A liquidator will has to make a commercial assessment of whether or not a claim should be pursued or not. And there's no obligation on a liquidator to actually put his hand in his own pocket to fund an action and pursue a claim on behalf of creditors. Generally, our role is, as I said, to report to creditors in relation to what claims exist, what potential, or the merits of those claims, and make it available to creditors to fund a liquidator to pursue a claim if need be. So, even though there are claims in all or most liquidations, they're not necessarily pursued. I mean, the cost of litigation is pretty excessive, as one understands. And also the cost of liquidations can get up there also. So actions aren't regularly taken. They're only taken if there are commercial and sound basis for pursuing claims. But the liquidation process itself can last between, generally the basic liquidation will last between 6 to 9 months, but they can extend to years if there's litigation pending. So, but it really does depend on each situation. I mean, each company has its own unique circumstances. And what I'd be happy to do for Jeff's clients, I guess, is happy to sort of sit down and go through and run through the specific options that are available for their specific matters if they find themselves in any financial difficulties. And I think it's more of exploring the options and understanding the options and alternatives, as opposed to going straight to the bank and mortgaging your home and tipping more money into a business that may not be viable. And what we find, and what we tend to find a lot, is where directors have tried to do the right thing by creditors, it's actually backfires on them, in the sense that creditors don't really appreciate that. They don't see that the efforts, the risk that's been taken by directors. They see that their debt's mounted or increased over time, and it's pretty stressful on directors or businesses continuing when they've got concerns regarding the financial situation. They've got to try and run a business. They've got to try and employ people. They've got the family to focus on also. So it's not an easy task running the business, let alone when there is financial issues at stake. So it's about exploring those options and alternatives. And there are different ways of going about things. There's sale of assets prior to liquidation. There's sale to third parties. Directors are in control of that right up until the date of liquidation. The role of the liquidator is simply there to assess what transpired. And as long as you've got commercial value for things, got market value for things, and you haven't put the company into a worse situation than what it was, then there's no issues with that, generally speaking. But it's about how things are done and how they're approached. And I think for anyone running a business, they just really do need to understand all their options before they focus on one. And I guess this is where Jeff can help out, definitely. And we've done a few matters together in the past where I understand, it's provided some comfort to the directors and has provided a better outcome for creditors, so to speak, moving forward. Because these things happen. I mean, who could have controlled the virus? I mean, it's happened. It's going to impact on most businesses out there. As I said, even us in insolvency, it's impacted on us. We're focused on cash flow at the moment because our business arguably is dried up to some degree. So it impacts in various directions.
Does anyone have any, before we would move on to the tax side of things, does anyone have any questions they just want to wave to me, or I'll unmute everyone just for a sec. So if anyone's got a quick question of Con at all, before we move on.
I don't have a question, but Worrells helped us through a very difficult period. So thanks, Con. I really appreciate it. And anybody looking for support, I would recommend them.
Thank you. I appreciate that, Jeff.
Yeah, they're certainly they're good to work with, Worrells. Anyone else?
Jeff, I'm more than happy for you to send out my email to all your clients and contact details if they like. So
good.
They can contact me directly on any matter. There's no cost to any consultation. So it's only if a matter does proceed, then we can canvass the cost aspect.
Okay, excellent. Well, thanks, Con. We'll let you get back to your afternoon.
So thanks for that. I appreciate that. And if I can help in any way, feel free to give me a call.
Excellent. Okay, so we'll catch you soon.